Hello, today we'll be presenting Carlsberg, and this presentation is made by Dirk Dator, David Berger, Buse Günay, and Martinez Taverna. Introduction to Carlsberg. Carlsberg is a European pale lager with moderate alcohol strength of 5% and is distributed to 140 different global markets. Their total market cap is $18.1 million and their headquarters are located in Copenhagen, Denmark. The company is founded in 1847 by J.C. Jacobsen, and they have total employees of 41,430. The company's current CEO is Chest Hart, and they have total sales of $9.9 billion. Despite Carlsberg being mainly a beer company, a proportion of the company's business comes from new products such as cider, energy drinks, and brewed beverages. As I mentioned in the previous PowerPoint slides, Carlsberg is distributed to 140 different global markets, and it operates through the following geographical segments: Western Europe, Eastern Europe, and Asia. So that's the reason that Carlsberg is #1 beer company in Eastern and Northern Europe, and they're also #4 largest beer company in the world. The company has 150 markets around the world, and they also have 500 different beer brands, including Carlsberg, Tuborg, and Baltika. In addition to that, the company sold 36 billion bottles of beer in 2012, which is a really good number. Carlsberg vision and mission statements. The company's vision statement is, become the leading beer company in the world in order to become the first choice among consumers, customers, and employees. And their mission statement is, be a dynamic beer provider with quality beers, exciting brands, innovative culture, and committed teams which brings people together and add more enjoyment to life. Lastly, the company's value statement is, integrity, responsibility, honesty, and ethical business conduct are the core values of Carlsberg, which support our strategy and protect our reputation as a responsible global brewer. We will also share some of the Carlsberg products. The first product that we would like to share is the Carlsberg. The beer type of the Carlsberg is European lager, and the alcohol volume is 5%. Next, we have the Carlsberg 0.0 alcohol-free. The beer type of this product is alcohol-free, and the alcohol volume is 0. Carlsberg 1883 is also one of their most popular products. The beer type of Carlsberg 1883 is European lager, and the alcohol volume is 4.6%. After that, we have Carlsberg 47, and the beer type of this product is Bock, which is different than the other ones we talked about. And the alcohol volume of Carlsberg 47 is 7%. Lastly, we will talk about the Carlsberg Chill. The beer type of this product is European lager, same as the first ones that we talked about, and the alcohol volume is 4.5%.
This slide will talk about the history of Carlsberg. So in 1847, J.C. Jacobsen founds Carlsberg. After, in 1868, Carlsberg export begins. In 75, J.C. Jacobsen founds the Carlsberg Laboratory to study the malting, brewing, and fermenting process. 1 year later, the Carlsberg Foundation is established to manage the Carlsberg Laboratory and to support Danish scientific research. Finally, in 1882, after falling out with his father, Carl Jacobsen sets up his new independent brewery, New Carlsberg. In 1889, Carlsberg starts exports to Asia. After, in 1906, New and old Carlsberg merged to become Carlsberg breweries. Later, in 1932, Carlsberg establishes an export department and regular visits to import agents are initiated. In 1954, bottle agreements are signed with companies in Ireland, Gibraltar, and Malta to bottle Carlsberg beer for their local markets. In 1970, Carlsberg is listed on the Copenhagen Stock Exchange. In this slide, I'll be continuing the Carlsberg history. In 1973, Carlsberg's iconic tagline, probably the best beer in the world, is created. Recently, in 2016, Carlsberg introduces the Rebrew project to celebrate the anniversary of Carlsberg Laboratory. 1 year later, in 2017, Carlsberg takes lead on sustainability and launches a new sustainability program, Together Towards Zero. And in 2018, Carlsberg launches groundbreaking innovations to reduce plastic waste. Market size in 2019, the global market size was valued at $617 billion US, with expectation it would grow at about a 4% annual rate through a forecast of 2019 to 2023. The geographic scope, the three largest regions alcoholic beverages sales are Asia, Pacific, Europe, and the United States. However, Carlsberg revenue breakdown is completely centered around Western Europe, Eastern Europe, and Asia. In 1983, there were only 49 breweries in the US. By 2017, there were 5,648 breweries in the US, representing an average annual increase of 339% per year. Number of companies. Top 5 companies accounted for half of the production in the world. The global beer market has accelerated its growth due to more disposable income in the hands of consumers. There has been an increase in population that prefers beer, products, innovation, and a large shift in consumer preferences. Today's consumers are commonly trying to reduce alcohol, gluten, sugar, and carbohydrates in beer, but without reducing its native taste. Also, the growing demand for quality improvement among consumers has led to the evolution of the adjusted health-related functionality of beer. Next, in the product differentiation, besides having tasty beer, to have a product differentiation, establishing a story and concept is key. Overall, the brewing industry is growing and becoming more efficient. Carlsberg improved many sectors that facilitate that bond between their product and customers. They invested in many technological projects to obtain a better beer quality, as well as improving their supply chain distribution. In vertical integration, within the supply chain, Carlsberg invested a lot to achieve in less carbon emissions. Growth in the brewery industry was achieved by technological advances. For instance, Carlsberg introduced prototypes of its green fiber bottle, which are the first paper bottles containing beer. To allow an improve in productivity for the company. Mix of scale, this phenomenon is key for some businesses and industries, including the brewery one. Companies such as Carlsberg can produce many batches of beer, and their cost per year would be reduced thanks to this phenomenon. With increasing health concerns of beer customers, beer companies try to lower their ABVs less than normal, or they try to create lower than 0.5% ABV beer, which is considered non-alcoholic drink. Now that consumers have been introduced to the commodity and convenience of purchasing alcoholic online, they are likely to continue to buy from e-commerce as the experience and convenience of shopping online only continues to improve. So Carlsberg's most competitive rivals are the other large breweries controlling the market. Right now, Carlsberg places 4th in largest brewery globally. There has been significant growth in small breweries, especially with trends now going towards niche brands. Substitutes, consumer preferences over the last decade have consistently been 40-45% beer, as compared to about 30-35% wine and 20-25% spirits. Carlsberg's main buyers are large customers such as supermarkets, restaurants, and other large suppliers. They are able to control what consumers buy. As one of the #1 brewery companies in the market, Carlsberg managed to cut down their distribution risk and their supplier risk. In addition, raw materials such as water or aluminum are easy to obtain. New entrants. Carlsberg is one of the largest brewery companies in the world, and this makes it much harder to compete for the new entrants. There are several political and legal issues arising that affect Carlsberg, such as local restrictions closing restaurants and bars till the end of the year. Economic. Global pandemic caused many companies to see decreases in sale volumes. Low interest rates lead to more debt accumulation and higher investment into multiples. Socio-cultural. Within country cultures, beer age limit varies. This affects directly the brewing industry in terms of sales. Technological advancements were substantially important for the industry to boost productivity on assets and return on equity. Generally, a ROA over 5% and an ROE over 14% is considered very good. As far as Carlsberg's industry goes, they are above average. This means that when it comes to producing profitability, they are using both their assets and equity efficiently. Carlsberg has seen a great deal of growth in the profit margin over the last few years, with it being at over 10% for 2020. Current and quick ratios under 1 mean the company does not have enough assets to liquidate all its amount of debt. Even though they are planning to pay it off, their debt is a concern for some growth investors. and this was reflected with their stock price going down classification. Carlsberg products are more known to be thirsty beers than tasty beers. This categorization of products removes them from a part of the consumers. As the Amazons of the world grow larger, customers seek convenience. Carlsberg yet another opportunity to reach more customers. Emerging markets. Carlsberg has extended a great deal of their marketing to Asia, where there are a lot of emerging markets with plenty of room for growth. ESG. With climate change and environmental concerns on the rise, many investors look into ESG and sustainability before taking a stake in a company. Carlsberg has positioned itself extremely well in this field and may attract future investors. Carlsberg threats. It is a socioeconomic factor which has caused many companies to see declines in revenue, including Carlsberg. Liquidity. They do not have enough assets to cover their debts if they were liquidated. Competitors. Carlsberg competes with the largest breweries in the global market. Some of these breweries have much more attractive balance sheets and larger market share.
Business level strategies. Carlsberg has a competitive advantage in the fact that they have a very large product portfolio, including over 400 brands. Carlsberg has done a great job with branding their company and their products. Carlsberg brand name is very important because it is recognized by customers across the world. Carlsberg does have an alcoholic and non-alcoholic beverages such as core beers, craft and specialty beers, as well as alcohol-free beverages like seltzers and different types of waters. Top's brand in the Carlsberg Group are Tuborg, Grimbergen, and Blank. More business level strategies. Innovation. Investing in the Drought Master as opposed to normal steel kegs has several advantages, such as better quality, better service, more profits, more variety, and takes up less space. A Carlsberg employee at a local store was quoted saying, "The new Drought Master system is a fantastic boost for drought beer. In particular, the selection of variants supplied for the taps. The guests praised the taste and the freshness, and the foam are top-notch." The next innovation is hard seltzers. With the huge push from consumers being in the healthier lifestyles and fitness, Carlsberg has responded and launched their new products, the hard seltzer beverages. Introducing Garage and Summer's By, both beverages have 4.5% alcohol and are under 100 calories. And a nice stat I wanted to include is that 68% of consumers aged 24 to 48 make attempts to consume a healthier lifestyle. So, significant changes in consumer behavior are changing the future, and Carlsberg understands that and wants to be at the forefront of these new opportunities. Distribution channels. Carlsberg products can be found in 140 different countries, with 75% of volumes sold are separated into these three regions: Western Europe, Eastern Europe, and Asia. Western Europe is the largest share of 44%. However, they only have 10 countries, while Eastern Europe has 13 and Asia also has 10. Asia, though, is the forefront of what their future is. Carlsberg has had a huge focus on China in particular, but they have been their main target for the last decade, I would say. And it is very impressive that Carlsberg is so diverse and able to control new markets through distribution channels and local stores. Corporate level strategy. Carlsberg is a single business company where 95% of revenue comes from alcoholic beverages over the last 20 years. However, in 2020, 100% of revenue came from alcoholic beverages. As I mentioned earlier, Carlsberg has 400 different brands set across the world, and this allows them to also penetrate every market possible. As I mentioned before, that they're very dominant in Europe, but they also control a large percent of the market share in Asia. And Asia is a new emerging market, and Carlsberg has made it a priority to put as much of their product in these new areas as possible in order to grow. Another corporate level strategy. The Sail 22 strategy was launched in March of 2016 with ambitions of making Carlsberg a successful, professional, and attractive brewer in their respected markets. They had key priorities of strengthening their core, positioning for growth, creating a winning culture, and delivering value for their shareholders. By 2030, Carlsberg aims to reduce their water consumption by 50%. while water consumption was reduced by 7% in 2020 from the years 2015 to 2019, only 11%. So we have seen that Carlsberg is very serious about this now, as time is also ticking for their mission. By 2030, Carlsberg aims to eliminate carbon emissions at their breweries, and in 2020 they reduced that by 12%, and from 2015 to 2019 only 7%. So it is clear that Carlsberg has taken this mission seriously and wants to help improve not only themselves but also their community.
As we get into Carlsberg's strategic challenges, I want to take a moment to go over our IFE and EFE weighted scores for their weaknesses and their threats. And this is because a lot of Carlsberg's weaknesses actually tie in to their possible threats, and this is really where we were looking when considering the challenges the company might face with our strategic recommendations. So starting off with the weaknesses, they have pretty weak asset to debt ratios, especially when compared to their industry median. And this signifies that their current assets and their long-term assets are not plentiful enough to take care of their current or long-term liabilities in the event where they needed to liquidate those liabilities. We've also seen over the last 4 to 5 years, their debt to equity ratio has been increasing, and this signifies that Carlsberg is likely depending more on their debt to finance new capital ventures instead of equity from investors. Looking at innovation, although Carlsberg has been improving their innovation recently, especially with their 2021 Drought Master model, their product innovation has been lacking. They were pretty far behind the curve when it came to adding seltzers and non-alcoholic beverages to their brands, and this led to them not gaining as much market cap or brand recognition for these new beverages as they could have. They have a lower than average asset turnover, which is also a pretty recent trend that we've just been seeing over the last 2 to 3 years for the company. And this could signify that there's some type of poor inventory management. And with poor inventory management, no matter what, you're probably going to be looking at access costs as compared to what you could have had, whether that be in holding costs or simply throwing out more product because it stayed on the shelf too long. Competitors, we consider this a weakness for Carlsberg because they are the 4th largest brewery in the world, so their competitors who own more market share than them have stronger brand recognition and more customer loyalty. And diversity, as we said, they are not a very diverse company when it comes to their products. 100% of their revenue comes from beverages, the majority of that being alcoholic beverages, and the very large majority of that coming from beer products instead of spirits or wines. As I mentioned earlier, a lot of these weaknesses actually lead into Carlsberg's possible threats. So those weak asset to debt ratios, it causes illiquidity. And illiquidity is very dangerous in times of volatile markets. As we saw throughout 2020 in the COVID-19 pandemic, companies that didn't have a lot of cash on hand or had too much debt suffered a lot more than companies that didn't. Looking at their weaknesses of innovation and diversity, without powerful product innovation, you're actually giving a lot more power to your substitutes who will come in and try and find those niche markets that you're not hitting and take market share away from you. It also gives more power to buyers because Carlsberg is putting a lot of emphasis on their large scale beer market, products that people normally buy from large scale realtors and distributors. And when a majority of their customers are going through middlemen like that, Carlsberg has little to no say in the price that those customers are seeing. So by increasing your innovation and your diversity and trying to find ways to meet customers without having to go through middlemen, you're taking more power away from those large retail buyers and distributor buyers and putting more power in your own hands when it comes to the prices that consumers see. And once again, with this low asset turnover, this can really only indicate poor inventory management. And like I said, that always leads to increased costs of some kind. So tying those weaknesses and threats together to come up with our challenges, take a look at our first challenge, illiquidity, which makes it very hard for them to invest into new innovations and new capital ventures. And their reliance on debt is not a good thing because, as we know, debt makes good times great, but bad times, much, much worse. Looking at the second challenge of low diversity in product innovation, this leads to dependency on their current product portfolios and gives much more power to the niche and substitute markets outside of Carlsberg. Their low asset turnover means that they're not currently efficiently using their assets to generate sales. And if you can't use your current assets to efficiently generate sales, it's going to be much harder to use new assets efficiently. And their competitors and substitutes take away a substantial share of their potential market growth, no matter what innovations they add to the market. So now, as we look at the recommended strategies for Carlsberg, let's once again take a moment to look at IFE and EFE weighted scores of their now strengths and opportunities. So looking at our first strength, they have pretty strong gross and profit margins, especially compared to the industry average. They have a very powerful market distribution globally, especially in Europe and Asia. Their branding, very well known with over 400 brands in their portfolio. And they have strong advertising and marketing campaigns, which make it pretty easy for them to push into new markets. They have very high sustainability scores, which looks very good. And over the last few years, we've been seeing a pretty high increase in their environmental score. Looking at their opportunities, ESG has become a very important point for new investors. E-commerce has grown substantially and has been putting a lot of retail businesses out of business. Emerging markets provide for large growth without a whole lot of competition because there's so much available market space. Healthy life habits, consumers have been moving towards these big healthy life habits, which opens up a niche market that has only been growing. And brand recognition to growth, a lot of consumers stick with the brands that they know and love, which means the more consumers you have, the more potential growth you might see. So now that we've talked about our IFE and EFE weighted scores for Carlsberg SWOT analysis, it's time to look at the strategies that we recommend for the company to pursue in the future. So looking at the first strategy, we suggest that they continue to increase their sustainability scores, not so much in environmental as they've been focused on over the last few years, but more so in social and governance to raise their overall score. They can raise their social score by diversifying more within their employees, specifically in mid and high cap management. And they could also improve their social score by having fundraising events and donating to charity organizations. They can help raise their governance score by working with global governments to help reduce underage drinking and illegal alcohol consumption and sales. By increasing their overall sustainability scores, they'll likely attract more ESG investors. This will make them less reliant on debt and more reliant on equity. This should also give them more cash flows to pursue innovative ventures in their products and their overall strategies. Looking at the second strategy, we want them to expand their e-commerce and make it so that it is easy to use for both small consumers and large tail retailers and distributors. We suggest they do this by working with a e-commerce software company such as Pathways 23. And by increasing their e-commerce, this should actually help improve their asset turnover, which in the long run would reduce costs, and would also help offset some of the buyer power that they struggle to fight off by allowing more small consumers to purchase directly from Carlsberg instead of being so dependent on the large retailers and distributors who have more control over the prices those consumers see. Looking at strategy 3, we suggest that they continue their product innovation, specifically looking more at their healthy habits, so increasing the brands that have seltzer options and non-alcoholic beer options, as well as just lower alcohol or lower sugar levels, and also maybe take a book out of another brewery known as Constellation brand and look into possible THC infused beverages. Constellation's brands back in 2019 bought a 30% stake in a cannabis company known as CGC. Since then, they've seen a pretty large increase in their price, and they've started developing THC-infused beverages. We think that this will take away from their dependency on their regular brews. This would also take away power from substitutes who might be pushing into niche brands, especially the healthy habits and possibly the THC-infused beverages. And it will, like I said, add to the overall diversity of their product portfolio. For the final strategy, we recommend that they continue expansion into emerging markets and especially focus on the emerging markets in Asia. Like I said, they are already pushing into Asia and saw a decent amount of revenue growth in that region over 2020. And by pushing into emerging markets, they are leveraging against their competitors by working in areas where their competitors do not have large market shares. And it should be quite easy for them to increase their brand recognition as well. Now that we've discussed our recommended strategies for Carlsberg, let's take a minute to look at the McKinsey 7S framework to see how well these new strategies tie in with Carlsberg's existing values. So first, getting into shared values, we believe all four of our selected strategies fit very well with Carlsberg's mission, vision, and all their values. The push for sustainability aligns with their values of responsibility and ethical business practices. Their push for innovation and diversity in their products aligns with their mission of creating exciting, innovative brands to meet all their customer needs. The push into e-commerce and emerging markets align with Carlsberg's vision of becoming the leading beer company in the world and the first thought of by customers. Now going into the structure, the hierarchy structure of a company is always going to be at risk when you're pursuing new ventures and expanding existing businesses. But we believe as long as they push their values and the line of authority early in the process, they shouldn't be in any sort of trouble. We suggest they do this by organizing the structure of their management ahead of hiring any managers or continuing with the processes of these new ventures. And we also just suggest that they set guidelines and hand out employee handbooks to any new employees. Looking at systems, in the cases of expansion, all systems within a company are going to face that same expansion. For example, the case of Carlsberg's expansion into the new markets, risk management must now take a multitude of other factors into consideration, including Asia's overall economy, laws and regulations, their tax rates, supply chains, etc. And the reason companies face this is because when companies expand or re-engineer, they are looking for optimum growth. So looking into skills, some of these strategies will force Carlsberg to seek employees with some specialized skills and additional manufacturing abilities. In the case of pushing into e-commerce, they might need to look at employees who specialize in website development, app development, and are friendly coders for easy and efficient use for customers. They may also need to consider updating their manufacturing process if they continue adding new products such as seltzers, non-alcoholic beers, and possibly THC-infused beverages. Looking at style, as discussing earlier, these new strategies align pretty well with Carlsberg's value and culture. However, the push into Asia is a push into a new population and new cultures, and they must maintain aware of these cultures and beliefs when they're considering their consumers in Asia and their demands. Finally, looking at staffs, as discussed in the change of structure with these new strategies, they're going to be seeking new staff with different skills and abilities. They should also continue to diversify their staff in the hopes of growing their social score in their overall ESG. And this means creating a staff that also has different perspectives and ideas for the company's future.
Carlsberg, please.
probably the best beer in the world.